Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, September 27th, 2017, and this is the Daily Report for gold and silver. A second day of extremely strong selling in gold and silver, specifically gold, with gold trading off by about 1.5%, closing down over $16 today to close at $12.8560. Silver also trading under pressure, but about half of the damage that we saw in gold, trading off 9 cents at $16.78, and that all partially due to a stronger U.S. dollar, now trading higher for the third consecutive week in a row, 93.17. Over the last couple of days, we have seen a dramatic shift in market sentiment, continuing the risk-on environment that had been prevalent, but also putting tremendous downside pressure on any item that is priced or paired in dollars, such as gold or silver. The U.S. dollar has been a recipient of statements made by Janet Yellen yesterday, as well as a continuation in the rise of U.S. equities, and today's speech by President Trump speaking about a tax reform that has been on the minds of so many traders because it is the optimism over that tax cut that has fueled the recent explosion in terms of equity prices beginning in November of last year. Gold is currently trading off about $16.40 at $12.8530. We were in fact stopped out of our current trade. We entered that trade at $13.12. We were stopped out below $12.91. I'm marking us out at $12.90 for a net loss of $22 or $2,200 per contract. The main factor that I see when I look at the market in terms of the most recent move is that we are absolutely at a hard cut line in the sand as these lows approach the 78% retracement of the last leg of this rally. And we're counting the last leg of this rally beginning just below 1260 and terminating at approximately 1263. From there, we had a market move down in which we had some tentative support come into the market, and this of course is where we took a stab at our long position. The market rose, we got in close to the top right in here, and then for the last two trading days, yesterday as well as today, we have seen this market drop immensely, losing about $25 to $30 in value. And traders, once we smooth out our data set by converting a daily chart into a weekly chart, we can see that even with Friday's small gain and Monday's upside surge, we have all but eliminated all of those gains, and now in terms of a line in the sand, it really necessitates that gold pricing finds some sort of support at the 78% retracement level. And again, it's a retracement of the second leg of the rally, but nonetheless, a deep retracement should really be only about 61.8%. 78, although acceptable, is an extreme correction, ones that we do not see normally. A break below this price point, however, would have to put into question the bullish model that we have been currently basing our assumptions on. We will obviously remain flat and let the dust settle. I want to see how the market reacts. If it does have a further downside decline, I want to see if we get any kind of a bounce at around the 1280 area. Low today still 1284.10. Market currently at 1285.50. And traders, we are looking at a weekly candlestick chart, this of the dollar index. We can absolutely see the lows that were hit, this being the first week of September, when the index traded as low as 91. And just as we have 3 weeks of defined lower pricing in gold, we also have 3 consecutive weeks at this point of higher dollar index pricing and a very strong surge in terms of the net change this week. And traders, lastly, I do want to take a look at U.S. equities, which have been the recipient of this strong market sentiment, this risk-on environment that has been so prevalent in the market recently. We can see on this weekly chart that we are once again close to an all-time record high, and that holds true not only for the NASDAQ Composite, the chart that we were just looking at, but the Dow Jones Industrial Average, which is the weekly chart I've just pulled up. We can certainly see that recent trading activity over the last couple of weeks has in fact been in record territory. To say that trading in gold has been tough recently would be an understatement. the market has come to points in which we would typically find some level of support, and in each occasion it has broken through there. We are looking at a moving target, meaning it is fundamental events entering the market, not technical signals so much, that have caused this most recent decline. Yesterday with Janet Yellen conveying a much more hawkish tone, and today a continuation of the risk-on environment that has been so prevalent with Donald Trump's announcement of a potential tax cut. We absolutely have a line in the sand, and that is the 78% retracement. The market is still trading above there. We want to let the dust settle and see if the market continues to track lower, how it reacts at that price point. This is Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.